Good day, I'm Dr. Chen Wen Chan. I'm a chartered engineer, chartered scientist, and a certified energy auditor. Today, I'm going to talk a little bit more about the economics of ESG compliance, especially in consumer essentials like food, retail, and energy. While I believe ESG investing should be a personal choice, for better or worse, ESG compliance as an industry-wide norm in practice is a policy mistake. Industry-wide ESG compliance, especially on essentials like food, retail, and energy, is an inflationary policy. The US Securities and Exchange Commission estimated that the upkeep cost just for the climate-related disclosure activity adds up to roughly $530,000 per annum. We have to assume roughly 0.5 to 1% of total revenue of a company goes into paying for the cost of just climate-related ESG compliance alone, as any higher percentages would incur further inflation on essentials. Essentials have long-term net profit margin of about 5% or less. As such, it is not like these companies can take a significant cut on their net profit margin to pay for the cost of ESG compliance without risking these companies to the risk of insolvency from typical uncertainties like inventory and currency exchange risks that are associated with global supply chain. When we divide the cost of ESG compliance by 0.5 to 1%, what we get is the total revenue that a company should have to be able to service the cost of ESG compliance. Do bear in mind that $530,000 per annum is only for climate-related disclosure. We haven't even included the cost of compliance in social and governance. If we do actually include the cost of social and governance, then only companies with revenue much more than $100 million per annum would be able to afford the total cost of ESG compliance. What this actually means is that very few companies can actually afford the cost of ESG compliance. For smaller companies to participate, governments worldwide would end up subsidizing for these companies en masse for the cost of ESG compliance. But government subsidies are not free. Either the government has to subsequently tax their citizens more, or government has to print more money. Either of which is essentially the same thing, causing citizens to lose real wealth through either higher inflation or higher income tax. There is no real improvement in the quality of life of an average citizen when ESG compliance is implemented, especially on essentials. We should be able to choose either to provide or purchase ESG products and services with our own money, but we should also have the option to provide or purchase conventional products and services without any ESG compliance. The important thing is that we should let free market to decide whether new ESG products and services can thrive against ones without ESG compliance. If free market leads to a scenario where ESG products and services cannot become commercially viable, both providers and consumers will suffer the economic consequences of ESG compliance. The only ESG beneficiaries are ESG financing like BlackRock, ESG auditors like KPMG, ESG ratings agencies like Sustainalytics, and ESG consultancies like McKinsey. But say if Free market leads to a scenario where 5% of us are willing to pay for ESG products and services, then let this 5% pay for the rest of the ESG compliance to these beneficiaries. In summary, ESG compliance, especially in consumer essentials, is anything but free market. Nor does ESG compliance lead to more efficient trade. That's it from me for today. If you like this video, please click like and do subscribe to my channel. I post more frequent written updates on LinkedIn and Medium, so feel free to follow me on either of those social media platforms. The links to those platforms are listed in the video below. Thank you. Have a good day.